there, good morning. You're watching Market Cafe on ET Now. It's me, Snehi Shah, and along with me today is my co-anchor, Ankita Saxena. Good morning to you, Ankita.
Good morning to you, Snehi.
Well, this is a show where we take you through all the important global stories that you need to be keeping on your radar. What's happened in the global markets overnight while we were asleep, what's happening in the crude as well as commodity markets, and in the latter half of the show, we'll also delve domestic and look at all the stocks that you should be keeping on your radar for today's trading session, as well as what brokerages are pointing out for you this morning. So with that, let's kickstart the show then. And Ankita, take us through what the global handover looks like. I believe the US markets were shut on account of a public holiday, but European markets are coming in largely flat.
That's correct, Snehi. Yesterday, the US markets were shut, but the US stock futures are absolutely trading mixed. They are flat in the red though, and GIFT Nifty is reflecting that. It's down 3 points, absolutely flat, and that is reflective of the US market futures, which are absolutely flat, trading in the red. But US markets, of course, were shut yesterday on the back of Labor Day holiday. But the investors are closely watching out data coming out of the US markets, which is the factory orders, the trade balance data, and the US PMI service numbers that will be coming out of the US markets today, and that we will be tracking very closely for you. But for European markets, the markets closed rather flat. Stock 600 was little changed from the previous session, apparent gains, after hitting its highest level since August the 9th. Now, we also saw some data come out of Germany. Germany's trade data showed 0.9% month-on-month fall in exports in the month of July versus the estimate of 1.5%. Also, the imports number rose by 1.4% on a month-on-month basis for Germany. Also, in the British markets, British clothing chain Superdry shares were down 18% as the stock resumed trading after a 3-day suspension. Now, the company announced the suspension on August the 30th as it pushed back the reporting of its full year results in order to let auditors conduct a final review. So largely a mixed handover coming in there. It was rather flat from the European markets, and US futures are also flat, and GIFT Nifty, of course, is reflective of that, Snehi.
Absolutely, Ankita. So that's what the global handover looked like in terms of equities. But let's also look at commodities then. And oil prices ticked up in Asian morning trade on Monday as market sentiment was buoyed by positive China as well as US economic data, and also the expectations of ongoing crude supply cuts from major producers. On that note, Brent crude was up 17 cents or 0.2% at that $88.8 per barrel mark. WTI crude also rose 25 cents, roughly 0.3% to that $85.8 per barrel mark. Now, on the demand side, China's manufacturing activity unexpectedly expanded in August. Data from Caixin's manufacturing PMI survey indicated, leading to renewed optimism about the economic health of the world's largest oil importer. Now, a series of economic support measures announced by Beijing last week, such as deposit rate cuts at some of the country's largest state-owned banks and an easing of borrowing rules for home buyers, have also supported prices. However, investors continue to await more substantial moves to prop up the country's embattled property sector now, which has been one of the main drags on the Chinese economy since its emergence from the pandemic. Now, other global players like Russia and Saudi Arabia are also shaping up this hike in oil prices that we're seeing. Russia has already said it will cut exports by 300,000 barrels per day in September, already following a 500,000 barrels per day cut in August. Saudi Arabia is also expected to roll a voluntary 1 million barrels per day cut into October. So as supply starts tightening, demand might start going up, and that will boost up the prices of oil. So we'll see how this pans out for oil prices as well, but largely looks like oil prices are set to continue their gains, Ankita.
Alright, then let's quickly take you through all the events that we will be tracking very closely. Back in India, in corporate action, we have Som Distilleries and Jupiter Wagons that will be considering a fundraise. Also, Gensol Engineering will be considering a bonus issue, and it is the last day to be eligible for dividend for Route Mobile. And in the IPO action, we have Vishnu Prakash Pungalia that will be listing on the bourses today, and that IPO has been subscribed a total of 87.82 times on the last day of its subscription, and that will be listing on the bourses today. And of course, we have Teachers Day, which is today, and here's wishing all the teachers a very happy Teachers Day.
Absolutely, and with that, let's also look at all the global stories that we're tracking for you this morning then. And in the development ahead of the G20 summit in India, it has been confirmed that Chinese President Xi Jinping will not be attending the event. Instead, Chinese Premier Li Qiang is expected to represent China at the summit. This news comes alongside Russian President Vladimir Putin's decision to skip the summit due to the ongoing situation in Ukraine. While the absence of these leaders is not unusual in the history of G20 summits, it raises questions about the dynamics at play in global diplomacy. The G20 summit in Delhi, scheduled for September 9 and 10, will gather leaders and delegates from 40 countries, including the 20 member states. Stay tuned for further updates on this significant global gathering.
And it will be a culmination of all the G20 processes and meetings held throughout the year amongst various groups. And a declaration will be adopted at the conclusion of the summit. But what does the summit mean to the world of business? Well, Sharad breaks it down for us.
An important event of G20 is there, and we'll take you through the business side of it. And India is, of course, the 9th largest partner coming in. The biggest nations, of course, is the European Union, US and China. And in terms of trade, is something which we'll be discussing on. Of course, the share of G20 nations when it comes to India's exports and imports, and this is for both merchandise as well as services. This is both the numbers are going more than 50-odd%. Now, also do remember is that the G20 numbers is a very important item, and of course 85% of the total contribution is happening for the world's GDP. Also, 75% of the global merchandise trade is there, and 2/3 of population is actually composed in the G20 summit. And also 82% of this total values are coming in the commercial services. Also, now let's look at the total trade and how the contribution has happened all across the nations itself. And of course, the larger ones coming in the Europe on the 9th space is India, where we are seeing a combined trade of almost $1,662 billion, and this is for the calendar year 2022. But now let's look at how the total trade picture looks like of India as when you compare it with the contribution to G20 vis-a-vis against the entire world. And we see the total trade with G20 for India is roughly $290 billion, while for import itself, if you look at it, the number is coming at almost $378 billion. Also, India's total trade with the world, that is something to watch out for, and that is also coming at a huge level of more than 450, and for imports itself it's coming at $720 billion. Now the question arises, what are the business discussions which are happening, which topics are there where the business would be focused on? And of course we are having sustainable energy, space economy, even the regulations on crypto has also come in the agenda, and lastly the global participation for financial inclusion.
Well, thanks, Sharad, for taking us through that. Clearly, lots happening on the back of the G20 meet, but preparations by the hospitality industry for Delhi's G20 meet are in full swing as the national capital's top hotels work on hosting over 10,000 delegates. A grand welcome is due for the G20 guests. At the Lalit, a lavish food spread ranging from Indian to Japanese cuisines is planned, and additionally at the Taj Palace, chefs are focusing on highlighting millets in their menu. Let's go across to Sumita Karir for a ground report on the same.
Festivities in the national capital this year have kicked in a bit early as New Delhi gears up to organize the G20 summit, which is happening over the weekend. In fact, top 5-star hotels in the national capital will be welcoming delegates, over 10,000 delegates from 20 plus nations. So hectic preparations, in fact, are underway in most of the hotels. Also, where we are coming to you from, the Lalit Hotel in Barakamba, where the staff here is giving final touches to all the preparations, etc., to all the arrangements, so that they can give an experience to all the delegates who are arriving here like no other. But let's go across and see the kind of welcome that they have put over here. Aside the traditional tikka, aarti and mala welcome, delegates at the Lalit will be welcomed by members of the specially abled, trans and LGBTQ communities.
Yes, 2023 is totally about millets, like dedicated to millets, like Shri Anna, which is initiated by Mr. Respected Narendra Modi ji. So, to keeping the things in our mind, so we have curated some dishes, which is a millet dishes. Like you'll talk about a breakfast. So we have a vadas, which is made by the with the millets, and all the chutneys and kind of we have a millet merge over there. Dosas, as like it's very famous in our Indian culture. So we have a ragi dosa for them, our the delegates and all.
But what's on the menu? Well, a lavish spread with delicacies from Japanese cuisine to suit the taste buds of delegates. The Lalit is preparing a total of 75 dishes prepared by a team of close to 100 people. Delegates will also get a taste of India's culinary heritage, with millets playing a big role, pretty much in line with Prime Minister's big push for millets. A similar story is playing out at the Taj Palace Hotel in the national capital as well. The Taj has put a special emphasis on the use of millets in culinary offerings. 120 chefs will be working on serving more than 500 dishes, showcasing India's cultural diversity to foreign delegates. And that explains why a premium is being charged by these hotel chains for rooms. RateGain Travel Technologies says ADR, or the average daily rate, has surged to 26,000 rupees from 6 to 8,000 rupees per night. Experts say a presidential suite, for instance, that costs nearly 1.5 lakhs per night on regular days is now being charged 5 lakhs per night by these hotels. All roads for the next 1 week will lead to the national capital, and all eyes will be on the big ticket summit. For the hospitality industry, well, they could not have asked for a better start to the season.
Moving on, in some other news, Russian President Vladimir Putin and North Korean President Kim Jong-un are likely to meet this month as Kremlin tries to acquire military equipment for its use in Ukraine war. As per reports, the North Korean leader would travel in an armed train to Vladivostok on the Pacific coast of Russia, where he would meet with Putin.
Turkish President Recep Tayyip Erdogan recently met with Vladimir Putin, hoping to persuade the Russian leader to rejoin a deal allowing Ukraine to safely export grain. Erdogan said that he believes a solution can be found soon to reviving the UN-brokered Black Sea grain export deal, including filling the remaining gaps. But Putin has made it clear that the initiative would not be restored immediately.
And some relief for the Chinese property market. As per reports, country's Garden has won an approval from its creditors to extend payment worth $540 million for an offshore private bond. Now remember, the said payment extension for Country Garden buys time for China's largest private developer to avoid defaulting.
Shifting focus then, as per reports, Barclays is exploring stake sale opportunities in the unit that processes payments for UK merchants. This comes as the bank seeks a partner to aid business growth and to raise capital. The business is expected to be valued at around $2.5 billion.
Well, that was a roundup coming in from the global news front, but it's time for a quick breather. Don't go anywhere. After the break, we go domestic. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Snehi Shah. Let's move on then. Honda has announced the launch of its latest global SUV, the Honda Elevate, now which will be available at an introductory starting price of 10 lakh rupees to 15 or 16 lakh rupees for the top variant. Now, ET Now's Sumit Chaturvedi caught up with Kunal Bahel, who's the Vice President, Sales and Marketing, Honda Cars India. Let's listen in to this snippet from that chat.
We're all prepared, so it starts going from the drawing board when we made a sketch of the car, which started from getting the feedback from Indian customers, what exactly they want from the SUV, and more specifically, what do they want from Honda's SUV, right? That's one. We've already increased our production capacities, so we're operating at about 540 production cars per day. Now it is being ramped up to 660 cars per day. Now this is primarily being done because we announced the bookings of the car from 1st of July, and we've got a very good response even when the price was not revealed. We've already had at about 5 months or 6 months of waiting for certain grades, and going on since the price is today revealed, I'm sure we get a more traffic from the customers. So we're all prepared and we're very happy. We're going to offer a very strong SUV for the Indian customers.
Kunal, one natural question that comes to mind is that, well, Honda, ruler of markets across the world, what took you so long to bring SUV? Were you waiting for the right time, right product? What were you waiting for?
Yeah, I think if we took some time, I agree, but yes, we've been very strong in the sedan segment, and that's how we believe that forte of Honda cars is in sedan, and we wanted to do much more in that. But yes, dynamically the world is changing toward SUV, not just in India but even globally, and that's how we took a step that we need to enter into the right space of SUV, which is more than 4 meters, which is the mid-size sedan SUV segment, and the segment is quite crowded. It's selling about 70,500 cars a month, and we have over 20 models in the segment. So with participation in this segment, I'm sure it should get us a good volumes for the Honda's market.
Well, it's a highly competitive market. 60% of the sales are coming from SUVs now. How do you differentiate your product from the products which are not available in the market? Safety first, features first, or it's a package of everything?
So I can talk endlessly on this, but yes, to keep it short, the Elevate is very nicely packed vehicle. It starts from an front style, which is a masculine bold design, which is not what Honda has earlier. Secondly, not just the exteriors, the interior looks are very dynamic. It has a combination of progressive and protective feeling. We have a very strong DNA of man maximum, machine minimum, which basically means we try to focus on customer who's driving the car. So the interior space of the car, I would say, is the best as far as the competition is concerned. Not just the interior space, but even the boot space is about 458 liters, which gives you a lot of flexible space when you go on external trips. Not just that, it has a tremendous ground clearance. It has a very short turning radius. It has packed safety features of active as well as passive safety features. But more than that, it also has a Honda sensing, which is basically the ADAS feature level 2. So by and all, the car is very nicely packed, and we price the car very competitively. This is the introductory price. I'm sure customers will definitely find a lot of value to this as compared to the competition.
And talking about the overall plans of Honda, it is the car which is currently being launched in India. What's the export plans from here, and how do you see Elevate taking a Indian DNA and going across the world?
So Elevate definitely is being produced and designed for the Indian market, but at the same time it's going to have a good export share. I cannot say which country and by when we'll start the exports, but yes, there could be a future plan for exporting. As of now, we're focusing on the Indian domestic market, as we already have a huge back orders. Our first endeavor is to increase the production, and we can supply to all the customers on time.
Alright, that was my colleague Sumit Chaturvedi in conversation with Kunal Bahel, VP Sales and Marketing at Honda Cars on Honda's most recent launch. But moving on then, IRFC is in focus after the stock surged 20% in trade yesterday with volumes 4 times of its 20-day moving average. Now, what's the story with the stock and what's leading to this rally? Somit joins in with all the details. Somit, take it away.
Well, if you see, IRFC stock has been in focus, but why are we doing this link today? Because if you see the shareholding pattern of IRFC, the promoter owns around 83.4% stake in the company, while the public shareholding stands at close to 13.6%. Now, of the public shareholding, mutual funds own around 0.8%, FPIs own around 1.1%, and nearly 10% of the stake is owned by retail and HNI investors. Now, yesterday, if you see the volumes on IRFC counter, both the total traded volumes on BSE and NSE stood at close to 54 crore. That is nearly 30% of the public shareholding and nearly 4% of the total equity. And volumes yesterday were nearly 4 times its 20-day average. The stock gained around 20%, locked in an upper circuit, and this was the biggest move for IRFC that we have seen since its listing back in January 29, 2021. On a year-to-date basis, the stock is up around 103%, and since listing, if you see, the stock has moved about 10% only 4 times, and all of these moves have happened in the last 1 month. The market capitalization of IRFC now stands at close to 87,000 crore rupees, making it the third largest NBFC in India by market capitalization, and it is even bigger than Shriram Finance, M&M Finance, L&T Finance and Poonawalla Fincorp. So what is leading to this rally? Firstly, if you see what does IRFC does, it does market borrowing arm of Ministry of Railways. It financed nearly 40% of the cumulative capital outlay of Indian Railways between FY17 to FY21. Now it's a low risk business model of IRFC. It has no interest, credit or asset liability mismatch risk. It follows a simple cost plus model where the risk is largely passed on to Ministry of Railways, and it earns a fixed spread over the loans that it provides to Ministry of Railways. All interest and currency risk is passed to Ministry of Railways, and nearly 98% of the lending is done to the railways, so there is a little credit risk, but there is still a risk that are there to this rally that we have seen in IRFC. Firstly, if you see in FY23, the company's disbursements were down nearly 46% on a YY basis, and management so far has not indicated or has got any indication from Ministry of Railways for FY24 disbursements. Now management is expecting some clarity to emerge in the second half of FY24. Now for FY24, if you see, the budget had provided for a capital outlay of around 2.4 lakh crore rupees for the railways, and this was supposed to be financed by budgetary support with no funding requirement coming in from IRFC. Now IRFC is also evaluating other projects, but the size of these other projects would be very small, which could lead to again a drop in disbursements for IRFC in FY14, FY24 also. Also, if you see the capex financing that IRFC has been on a declining trend. In FY21, it financed nearly 46% of the capital expenditure requirement of railways, which came down to around 19% in FY23. And the biggest risk for IRFC is the fact that government needs to dilute their stake. Now government holding stands at around 83.4%, which needs to come down to around 75% by the end of January 2024. And also, if you see the valuations of IRFC, they have doubled over the historical averages. Current price to book, the last 12-month price to book stands at close to 1.9 times, as against 0.8 times that we had seen. That's the historical average for IRFC in the last couple of years.
All right, thank you so much for all those details, Somit. But with that, it's time to take a short break. Don't go anywhere. After the break, we get you all the stock-specific news.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Now, before the break, we told you we would take you through a list of all the stocks that you should be keeping on your radar today and the ones that could be potential buzzers in today's trading session. And we're joined in the studio by my colleague Ansh to take you through just that. Good morning, Ansh. Take it away.
Good morning. So Mahindra & Mahindra Financial Services will be the first stock in focus for today's trading session on the back of operational updates for the month of August. Company lent about 4,400 crore, a 15% increase as compared to the previous year. Also from January to August, they lent around 20,950 crore, marking a 22% rise compared to the same period in 2022. Apart from this, Oil India will also be in focus as company's board has approved an equity contribution of 1,738 crore in line with the shareholding in a joint venture company with Assam Gas Company. IEX will also be in focus on the back of the operational updates for the month of August. The total electricity volume showed a remarkable increase of 21% on year-on-year basis. Notably, the market clearing price reached 6.89 rupees per unit, reflecting a substantial 33% increase on year-on-year basis. Cipla will also be in focus as Cipla Medpro South Africa has entered into an agreement to acquire Actor Pharma for $48.6 million. Sona BLW is buying around 54% of Novelic for 40 million euros. Lastly, Hero MotoCorp will be in focus as company plans to invest around 550 crore in Ether Energy's right issue.
All right, Ansh, thank you so much for all those stocks that you mentioned. We will be keeping all of them on our radar. But a couple of brokerages have also released their call on Raymond. Now, Shesha is here with all those details. Take it away, Shesha.
Yes, Raymond, and focus on the back of two initiating coverage notes that have come in. First up, let's talk about Jefferies, which has initiated coverage with a buy rating with a target price of 2,600. Jefferies says that the company is already a net cash company and it is all set to list its lifestyle and real estate business separately in less than 12 months. They say all eyes are now on growth and simplification for the company's group structure going forward. Growth focus is visible across businesses and they expect Raymond to register revenue growth of about 13% on a CAGR basis over the period FY23 to 26 and earnings CAGR of about 24%. Meanwhile, Morgan Stanley, Motilal Oswal rather, has also come out with a note where they have initiated coverage with a buy stance and a target price of 2,600. They say that the company is rebranding a legacy with financial discipline. Multiple growth drivers are in place, and as far as segment-wise growth levers are concerned, they say Ethnics by Raymond is aiming to expand its wedding reach, while as far as their real estate arm is concerned, it continues to be a key growth area and growth driver for the company going forward. Improving earnings trajectory and compelling valuations is what makes them bullish on the counter. So they've also initiated coverage with a buy rating, and 2,600 is the target that they've given on Raymond.
Alright, Rachesha, thanks so much for taking us through that. Now, we will be keeping a close eye on Raymond today, but another stock, an FMCG major, Dabur, will be in focus on the back of that meet that they had with Nuvama. So let's go across to my colleague Winnie, who's standing by with all the important takeaways of this meeting. Winnie, good morning, take it away.
Good morning, and absolutely what Dabur is talking about and exciting highlights have actually come in is that Dabur is looking to expand its total addressable market in the food and beverages space, and they're expecting a 20% growth, especially coming in from the Badshah Masala side, which is the acquisition they made in the in FY24. That's the expectation they have. Now they're already saying that they've started advocating in the Ayurvedic healthcare as well, a higher margin business, which is obviously the Ayurvedic healthcare business is a higher margin business, and they're headed by the ex-Himalaya CEO, that is Mr. Hayden, who is heading this as well. So obviously that is something that will be exciting to watch out for as well. News around the honey portfolio has hardly had any adverse impact is what the management is highlighting, since Dabur is in compliance with the FSSAI regulation. So not much of a worry in terms of that sugar content in honey, which everyone is talking about. That's not a worry that is coming for Dabur as well, and not an impact in terms of the business of the company. International business continues to improve for the company. Market share gains for 90% of their portfolio is what they've seen coming in. And lastly, they see a potential rural recovery coming in as well. So that's a positive sign over there.
All right, thank you so much for that, Winnie. But with the PSUs continuing their onward journey, a rally that has many legs, we sent our focus on BHEL, a comprehensive bull versus bear picture. Let's go across to my colleagues Lisa and Shrishti for the same.
Well, yes, BHEL is definitely on a roll as the company has won back-to-back orders starting from last week. So I'll take you through what's working for the company.
And I'll take you through what are the likely headwinds for the same.
Well, so starting last week, the company secured a string of orders from NHPC as well as Adani Power, and that amounted to over rupees 6,000 crore. Also, a substantial order win from NTPC, where the estimated value that came to around 10,000 to 12,000 crore. So the company won a prestigious order for hydropower project of around 2,880 megawatts from NHPC. Quite a significant order. Now remember that these large order inflows, they come on the heels of BHEL's lackluster performance in Q1 FY24, which was marked by weak execution. And also these orders that they won, that's mostly on the non-thermal side, that is the railways as well as hydropower. So the company has an order backlog of more than 1 lakh crore. So pick up in the thermal demand as well as efforts to foray into the clean energy that will provide sustainable medium-term growth for the company.
No doubt that there has been great order wins and the stock has been on the roll, but we have to remember that the profitability has not been consistent for BHEL because all these recent order wins, they have a very long gestation period. Other than that, the key monitorable will be the execution part and how it will impact the profitability, isn't it?
Well, yes, right, because these orders are mostly around in the range of 8 to 9 years, which they have to complete within those period, while the thermal order that comes to around 3 to 5 years. But another positive side for that company is that the BHEL, they are strategically transforming themselves from a pure thermal player into a diversified engineering player, because they are focusing more on railways, defense. So they are aiming to have around 50% non-thermal mix in their long term that they are looking at. So, well, that bodes well for the company, right, Srishti?
But however, Lisa, the significant diversification may take a longer time as the order book is expected to be dominated by the power segment on the back of the large thermal projects in the pipeline. And also 70 to 75% of BHEL's revenue is still from the power segment. We can't forget that.
So for now it will be thermal, but another bull case that is coming for the company is that they are focusing on clean energy as well as renewables. And recently BHEL as well as Green Start Hydrogen India, they have signed an MOU for potential collaboration, and that paves the way for green hydrogen road that India is focusing on the national green hydrogen mission. So that also bodes well for the company.
But however, this needs to be monitored closely as the green energy and the renewable market is witnessing intense competition from the foreign and domestic players. So how significant presence BHEL can make, that will something we'll be watching out for.
Well, yes, from the new areas, they definitely do have competition, but from the existing thermal that they are into, they are majorly into, their competition is quite limited. Also, on their financial aspects, Srishti, that the strong balance sheet bodes well for the company, because the company has a net balance sheet, the debt level that is at a negative level right now.
Okay, but BHEL enjoys a negative position in the net external debt, and the company's total book, if we see, then the working capital cycle will result in a good execution. But all these things really need a key monitorable going ahead, how it will impact the borrowings, and if there is a need of additional borrowing or not, that only time will tell.
Yes, but the working capital situation, that has somewhat seen some improvement, because the percentage of working capital to sales that has fallen from 105 in FY21 to 80 days. So additionally, they also have a surplus land bank of around 14,000 acres, which can be put to good use in manufacturing facilities also. So that was the bull versus bear case, right, Srishti? So though the street has given a thumbs up for the company, considering that the re-rating has done, but however the challenges that has been pointed out by Srishti, that also must be taken into account.
All right, ladies, thanks so much for taking us through the bull versus bear outlook on BHEL. Remember, at 10 a.m. today, we will also be joined by K. Ravi Kumar, who's the former CMD at BHEL. So keep an eye out for him as well on the channel. But let's get a move on then. And Venu Gopal Gare, who's the managing director at Bernstein, has a positive outlook on the markets and is not seeing much downside risk at this juncture. Listen in to his outlook.
I do believe there's a room for a decent cycle shaping up in India over the next 3-4 years. So what it means is that, from a purely CAGR perspective, we're going to be probably higher than the low double-digit number if I take a 3-year view. The problems and challenges are more about the next 6 to 8 months. Are you going to generate 4-5% returns from here, or probably be flat or down? I'm more at an index level in the flattish sort of a camp at this juncture for the near term at least. But at the same time, I do believe that market is going to chase themes, chase some of these small caps, where people don't really bother about valuations, right? Which is more thematic, in given that these companies can disproportionately see earnings rises as well. So bottom up picking perhaps important to a large extent at this juncture. If I take a 6-month view, and SMIDs, even within that, you're just chasing momentum in certain places, but then you don't really have a valuation anchor in place. But on a 3-year view, I think I would still want to be believing that we're going to in for a decent return journey. Look at IT sector. I mean, I don't know whether we should say that everything is priced in yet. It's a different thing that we are actually overweight IT as well. So, but then we were overweight IT. Very nicely, we had actually creeped into IT overweight and funded that to consumer tech than pure IT services, which is when we realized that, there are going to be some challenges which we can't really quantify. So we are more overweight in consumer tech within IT, right? So that's where our weights are. But looking forward in the next 6 to 12 months, I would probably say that, look, end of the day, the worries that people have, especially around global growth and global meltdown, have been proven wrong to some extent, especially about global growth, right? Things have actually held fairly well even in the US. And we are not going to be seeing the GFC kind of a situation. So at some point of time, the market realization would also be that, hey, things like AI are actually going to be positive drivers. They won't be initially anyways, in terms of, order flows and stuff. So once there is a certainty of bottom, that is where you'll probably see IT violently move up. Is it going to happen in the next 2-3 months? I don't think so. Could it happen in a 12-month to 18-month time frame? There's a possibility of that, right? Given that valuations have also come down.
Well, with that, it's time to wind down on this edition of Market Cafe. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. The market will take the action forward.